Liquidations in the crypto market are beginning to mount as news of Silvergate shutting down and the lawsuit against Chokepoint is digested. Over the past 36 hours, liquidations have crossed $306 million, with Bitcoin being the most liquidated at $119.2 million. Ether follows with $75.5 million. Unsurprisingly, nearly all the liquidations are on traders with long positions opened. Their positions were not entirely unwarranted, as before the recent reversal, the market had looked like it was building up momentum. Most of the liquidations came from Binance, which accounted for $105.7 million of all liquidations. OKX and Huobi followed. Those who shorted also saw some losses, with the number of short position liquidations on Binance amounting to $14.11 million. Overall, this figure was $30.44 million. The past few days have shaken the market, and recent developments do not offer an optimistic picture for the short-term future. The market is still reeling from the effects of the incidents last year, and this continues to have a cascading effect. Mark Yusko, founder, CEO, and Chief Investment Officer of Morgan Creek Capital Management, co-founder and partner of Morgan Creek Digital, posted on Twitter in the wake of the liquidations going on in the crypto market. According to Yusko, Morgan has lost a market cap of $19 billion to the peak market cap of Silvergate, which is $16 billion, and yet regulators are clamping down on crypto banks, saying it's a crypto problem. He further commented that SVB Financial Group has also lost 75 times more market cap of $9 billion compared to Silvergate, but yet again, it is regarded as a crypto problem. BitMEX co-founder Arthur Hayes exclaimed that Federal Reserve Chair Jerome Powell might have broken the U.S. banking system. His comments come as Bitcoin prices plunged to a two-month low below $20,000 during the Friday morning Asian trading session. Pershing Square founder Bill Ackman said the U.S. government should consider a bailout for SVB. He commented that the failure of SVB could destroy an important long-term driver of the economy, as VC-backed companies rely on SVB for loans and holding their operating cash. Investment manager Alden commented that only a tiny fraction of the total $17.6 trillion in U.S. bank deposits is backed up by physical cash. Deposits can easily flow from one bank to another, but can't easily flow out of the banking system in aggregate. Big banks are rather safe. Smaller and riskier banks less so, she tweeted. Goldbug Peter Schiff chimed in, commenting that the U.S. may be on the verge of another financial crisis. He suggested that the Fed may return to quantitative easing QE again by the end of the month, adding, "This should send the dollar tanking and commodities soaring, especially gold. This might turn the financial crisis into a U.S. dollar and sovereign debt crisis." Meanwhile, Zero Hedge tweeted that four major banks, including Bank of America and JP Morgan, were running at net unrealized losses. Many Bitcoin maxis believe that Bitcoin solves this issue, as it has always survived all related crises. Bitcoin was spawned from the previous global financial crisis in 2008, which was caused by banks. Satoshi's vision was a currency that did not involve banks, intermediaries, or fractional reserves. This is where a bank only holds a fraction of the assets on its books. The rest is lent out or invested elsewhere. A bank essentially profits from other people's money, offering very little in return. Furthermore, a bank run would be the inevitable end should customers all want their money back at the same time. This appears to have occurred with at least two banks over the past week, and more could follow. According to a tweet by Mark Yusko, regulators are squashing crypto companies so that incumbent banks can take over the crypto business from disruptive competitors. He commented that Operation Chokepoint feels a lot like the Knickerbocker Trust debacle in 1907. Longtime crypto supporter and venture capitalist Nick Carter also tweeted that the failure of SVB will be the second largest bank failure in U.S. history. He further commented that it would be a titanic event and won't be limited to just startups and VC. He also wrote a very detailed expository regarding Operation Chokepoint, which was mentioned by Mark Yusko. According to Carter, what began as a trickle is now a flood. The U.S. government is using the banking sector to organize a sophisticated, widespread crackdown against the crypto industry, and the administration's efforts are no secret. They're expressed plainly in memos, regulatory guidance, and blog posts. However, the breadth of this plan, spanning virtually every financial regulator, as well as its highly coordinated nature, has even the most steely-eyed crypto veterans nervous that crypto businesses might end up completely unbanked. Stable coins may be stranded and unable to manage flows in and out of crypto, and exchanges might be shut off from the banking system entirely. For crypto firms, obtaining access to the onshore banking system has always been a challenge. Even today, crypto startups struggle mightily to get banks, and only a handful of boutiques serve them. This is why stable coins like Tether found popularity early on to facilitate fiat settlement where the rails of traditional banking were unavailable. However, in recent weeks, the intensity of efforts to ring-fence the entire crypto space and isolate it from the traditional banking system has ratcheted up significantly. Specifically, the Biden administration is now executing what appears to be a coordinated plan that spans multiple agencies to discourage banks from dealing with crypto firms. It applies to both traditional banks that would serve crypto clients and crypto-first firms aiming to get bank charters. It includes the administration itself, influential members of Congress, the Fed, the FDIC, the OCC, and the DOJ. Banks taking deposits from crypto clients, issuing stable coins, engaging in crypto custody, or seeking to hold crypto as principal has faced nothing short of an onslaught from regulators in recent weeks. Time and again, using the expression safety and soundness, they've made it clear that for a bank, touching public blockchains in any way is considered unacceptably risky. While neither the Fed, FDIC, OCC statement, nor the NEC statement a few weeks later explicitly banned banks from servicing crypto clients, the writing is on the wall, and the investigations into Silvergate are a strong deterrent to any bank considering aligning itself with crypto. What is clear now is that issuing stable coins or transacting on public blockchains, where they could circulate freely like cash, is highly discouraged or effectively prohibited. As stocks and crypto keep plummeting and the general economic outlook looks very gloomy, little is known of the best path to take during troubling times like this. So many predictions regarding a global market crash keep surfacing, and fear is being spread through the whole industry.
Today's episode is sponsored by iTrust.capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right, iTrust.capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust.capital. Click the link in the description to open a free account now.
What do you think of the recent happenings in crypto and the financial market? Let us know your thoughts in the comment section below. Also endeavor to give us a like, subscribe, and turn on notifications for future videos. Thanks for watching.